Welcome back. We are now seeing gold at hitting new all-time record highs as the crypto market is wavering, and a lot of people are anticipating higher highs in altcoin season. And whether we're going to get that or not, I'm not sure. But in today's video, we're going to be exploring the entire financial markets. We're going to be looking at the macro picture and what is going on with altcoins, with meme coins, with the World Liberty Finance Trump coin. What's happening with gold, what's happening with stocks, and more. Because remember, bulls will make money and bears will make money. But if you don't understand how the market is rotating and how the market is moving around, it's very hard to identify the time to buy, the time to sell, and the time to just wait things out. In today's video, we're going to try to explore what is going on in the markets and how to position ourselves appropriately. And you guys know we upload every single day on this channel, so make sure you guys are subscribed to the channel. That way you never miss a new video. Also give this video a free thumbs up, because sometimes we do deep dives into individual stocks or individual cryptos or individual assets. And sometimes we talk about the macro zoomed out picture to understand where we are, generally speaking, in the market and where we are going. And we also look at the psychological market chart on a regular basis. In my view, we are right here in the euphoria and complacency phase, and there is going to be a lot of volatility in this phase, a lot of movement around in the price. But at the end of the day, we don't know where we are in the cycle until afterwards, when we kind of reflect and say, yep, that was the top. Yep, that was the bottom. Yep, that was right before we started a massive move. But we can kind of figure out when these things are going to happen based on everything else that's going on in the markets. And that's what we're going to be talking about in today's video. So make sure you guys are subscribed, give the video a free thumbs up, and let's start right here before we get to the gold stuff. Now, the Treasury Secretary, Besant, he's now saying that the Trump administration will tackle high housing costs with new measures. Now, I want you guys to understand this setup here, right? There's a lot of people anticipating that the Federal Reserve is going to cut rates in September. The market is trying to price this in, right? Bitcoin and crypto doesn't really know where things are going, right? You see a little bit of bullishness, but generally speaking, the market is moving much more volatile than we've ever seen, which means to me the market it's not really sure. You have this tug between the bulls and the bears, right? Whether the Fed's going to cut or not cut rates, or maybe raise rates, right? People are not even thinking about the potential that they are going to raise rates. But now we're hearing that the administration is going to look at new measures and potentially call an emergency in the housing market. He emphasized the urgency of the situation, describing it as an all-hands-on-deck challenge. He told the news in a separate interview that Trump may declare a national housing emergency this fall to address rising house prices and dwindling supply. The housing market has been hardest hit by the U.S. Central Bank's tight monetary policy and obviously the higher cost to get a mortgage. But here's the deal, guys. Like, if the Federal Reserve is going to cut rates, everybody thinks this is the answer. So why would they have to create a housing emergency declaration to create new measures to make homes more affordable? I also personally don't necessarily agree that there's a housing shortage. I think that people who are selling their homes don't want to lower the price, because we are seeing markets across the U.S., more inventory sitting on the market a lot longer. I mean, I've looked at markets where homes have been on the market and brand new builds on the market for multiple years, or they get listed and then pulled off, listed and then pulled off. And the prices are not coming down. I mean, guys, if you agree and believe in what, like, Elon Musk says about the population dwindling in the U.S., and I mean, it makes sense. The baby boomer generation, these were families of like 20 people, right? And now people maybe are having, families of 2 or 3. It's not the same. And a lot of that baby boomer generation is starting to kind of move on. And so, the homes they're selling haven't even been touched since the 1970s, right? When it was brand new build. Well, if you go in the house today, it looks like you're time warping back to the 1970s. It's never been updated, and they're selling these homes at premium prices, and they don't want to lower the price. So I don't necessarily think that there's a housing shortage. I just think there's an imbalance between what is affordable and what the sellers are willing to part with, right? Because the boomer generation, they don't have to sell their home. They may want to, but they don't have to, right? And so they're not going to take lower prices of what they think it's worth, whether it's actually worth that much or not, I don't know. But this gives us insight that the Federal Reserve cutting rates may not fix the issue. And even if they do cut rates. What if they don't cut rates in September? There's a potential that they cut rates and then say, we're not going to cut for a few more months because we're going to wait and see kind of how this works out. How is that going to be for the market? And the market seems to be pricing this in because now gold prices have hit new all-time record highs. And you guys know, gold barely moves in price to begin with. So when it is moving, it's time to pay attention. Now, if we look at the gold price over the last year, obviously it's gone up 41%, which is a pretty good number. But this shows rising risk over the period of time, very similar to what we saw in 2020 and 2021. They were printing money, but the inflation risk was going higher because now the money was making in the economy and people were spending their money, but there was less supply. So all these companies started ordering more and more and more. And then they got more supply, and then the demand started to dwindle. And then you had this huge supply demand imbalance on both ends. And that's where we got super high inflation because now all these companies are sitting on all of this inventory. We've seen it with car companies. We saw it with like Home Depot type places, right? There was a shortage of wood during the pandemic, and then there was an oversupply and the prices started to come down. We also saw that with food and stuff like that. But this is what's getting priced in. I mean, if you look back to 2021, it doesn't look like a lot of movement, but it was. I mean, we went up 12%. We went up another 12%, down 15%. And these kind of moves in gold is pretty extraordinary. I mean, if you really think about it. And again, the run up was 2018 into 2020. Then the risk was realized with the pandemic, but this was the lead up to that risk. And what happened at the beginning of the pandemic? Massive drawdown in financial markets all over. And so we're starting to see this run up again. And so that's telling me that gold is sniffing out potential money printing, potential debt issues, all these kind of macroeconomic factors that could impact the markets to the downside. Because again, I'm not talking about investing in gold. I'm just saying use this as a marker for where we are. If you put the gold price with the Bitcoin price, let's look at this over the course of time. Yeah, you can't even let's put it on the 5-year chart. What you can see is that Bitcoin is the yellow line, gold is the blue line, right? Barely any movements. I wish it was logarithmic because it would be easier to show you, but you can kind of see that the gold price started to move up from 2024 in the last year. Gold price started moving up and so did Bitcoin. But the moves in gold were more steady. Bitcoin was a lot more volatile. You can clearly see that. And so at the beginning of the pandemic, like people are pricing in gold for a recession or an economic downturn or something like that. And so at the beginning of the pandemic, gold may have still been going up, but every other market, including crypto, cratered. And it recovered afterwards, but that crater is a great buy-in opportunity, and we don't know how long it will last or anything like that. So I feel like the gold market is sniffing something out, whether it has to do with the Federal Reserve not cutting rates and that pushing the overall economy into worse conditions, or they cut rates and that doesn't fix the issue. And there's other, things that are going to impact the economy more than just a rate cut of 0.5% or 0.25%. I mean, it's almost nothing. And so how does this impact crypto? Well, we continue to see more of what we've been seeing all year, which is tapping the market while the market is in euphoria zone. A lot of people don't think that we're in euphoria in the market's psychology chart, but I believe that we're even past it because the euphoria, you don't realize that you're in it, right? But we've been seeing the meme coin situation, hundreds of millions of dollars extracted from the ecosystem. IPO after IPO, companies converting from being like medical companies to Bitcoin treasury companies overnight, and we have self-storage companies announcing that they purchased 0.048 Bitcoin. It's like, what? $4,000 a Bitcoin? That's what we're like making an announcement for? That is the euphoria in the market. And to further show you of where we are in the cycle, Gemini is now announcing the launch of their IPO. Now, we knew Gemini was going to IPO this cycle. At least we assumed that they were. But it, they only have a limited amount of time to actually go IPO and get in the market, because if you IPO in a downtrending market, your stock is going to drop precipitously, and then nobody's going to buy it, and it will continue to drop. But we have other companies like Nakamoto. This is a perfect example, right? This was a medical company that changed to Bitcoin Treasury. And what has happened since they did that, right? The initial pump and then the dump, right? And why is it dumping? Well, because they keep selling shares on the open market to buy more Bitcoin, as Bitcoin is at all-time record highs. And so if we continue to downtrend in the Bitcoin price, even just in a corrective move over the course of maybe 30, 60, 90 days, something like that, this could pull all these stocks significantly down. And so this is not necessarily, I mean, a lot of people are saying, well, that's a bear market, and maybe it will be. But I'm just looking at it as an opportunity, right? Because obviously, I think Bitcoin is going to go up over the course of time. And I think these Bitcoin treasury companies are going to do fairly okay over the course of time, especially if they start doing stuff with the Bitcoin. So these may be entry points. These may be good areas to start investments. Gemini, I personally think Gemini is a really good company. Let's see what they're going to be valuing the company at. So it says Gemini announced the initial public offering of about 16 million shares. They're going to be priced at about $17 to $19. So let's do the math on this. We'll just say 17 million shares. They chose a very odd number for this. And we're going to multiply it by $18, $306 million. I would say that's pretty in line with what Gemini should be valued at, because, again, we looked at the Gemini earnings and it wasn't as good as many people thought. But I do think that Gemini is one of the better companies out there. They are fully regulated, highly regulated. And from what I've seen, they are doing right by their customers, which is you don't find with every single company, right? And so we've also seen Gemini flipping Coinbase on the App Store after they launched the XRP MasterCard. Now, obviously, we've covered this. It wasn't that big of a deal, but obviously the XRP army love anything XRP branded. But, this also shows the change, because previously Gemini never listed XRP, and they were it seemed like they were anti-XRP. And they've changed and they listed XRP. They're more XRP friendly now. And I think that a lot of that has to do with just their ability to just be a good company, right? And be able to adjust and change based on the market conditions. Talking about that, we also recently had the Trump family's World Liberty Finance basically launching their coin, the World Liberty Finance coin. And this article says the Trump family's wealth balloons by $5 billion on paper following the launch. Now, there's a lot of back and forth in the ecosystem of crypto and the community about whether this is a good launch or not. As you guys know, I believe in free markets, so I don't think that there's any difference between the president owning a home or a congressperson owning a home and being able to legislate on that versus owning crypto and being able to legislate on that. I don't see I believe in free markets, and people should be able to invest in whatever they want. They want to launch a World Liberty Finance coin, go for it. And you guys are going to say, but Cryptoviser, you always talk nonsense about meme coins. Yeah, I do, but I still believe that you should be able to trade meme coins. And if you want to, gamble like that, go for it. Not for me, probably not for many of you, right? Because we know it's going to be a pump and dump. But in terms of World Liberty Finance, this was much anticipated. It's not like it was a surprise, but I saw a lot of posts on social media about, oh my God, look at the crash. I mean, it didn't really crash. It started at 22 cents, and we're currently at 22 cents. Did it initially pump on the listing and the launch of the coin? Probably, but that happens with almost every coin, because the liquidity has to enter the system. The orders have to enter the system. And so there's usually a lot of volatility right at the launch and then a leveling out. And that's exactly what we've seen. Now, obviously, I would recommend looking at their tokenomics because only 25% of all of the supply is in circulation. Will the price go up? I think over the course of time, it's likely it will. But again, I believe that we're at the end of the cycle. So is this the time to invest or is it not? Personally, for you, it's probably, you have to make your own decisions on that. I remember in previous cycles, and the further we go, the closer we are to the bear market, right? And so the more bullish people are, which it seems like the whole market is just bullish about everything. There's no way, Cryptoviser, that we're going to go down to $70,000 Bitcoin. There's no way that Ethereum is ending this cycle without all-time record highs. And I'm like, no, that's possible. And when the market is saying, like the majority of participants in the market are in complete and utter denial about it, that makes me actually think that we're further down in this cycle than many people actually believe, including myself. I think we're still up here, but there's a potential that we're down here, right? Denial phase. My investments are great companies. They will come back. We just need to wait for the Federal Reserve. We just need to wait for the president. We just need to wait for Congress. It's always waiting. That's not how to invest. You want to invest based on fundamentals and based on market movements and based on potential chart anomalies, right? Meaning, like if a coin, like for instance, am I going to invest in Kindly or Nakamoto right now? No, but in a bear market, potentially. Am I going to invest in gold at all-time record highs? No, but there are people doing that. That tells me we can go much, much higher, but we're at all-time record highs. Nobody should be the most bullish they've ever been at all-time record highs. You should be the most bullish at the bottom of the market when everybody's fearful. That's when you should be the most bullish. And that was 2 years ago, and that'll probably be in another year or two from now. But for now, I still think that we're at the end of the cycle, right? And so World Liberty Finance, this is another example of kind of what's going on. But guys, there's still a lot of money to be made, right? Maybe not in crypto, but in technology adjacent products. Gen AI is coming for online checkout in a seismic shift for internet shopping. Now, this came out last month, and effectively they're talking about using AI and ChatGPT for online purchases. And it seems like PayPal is heavily involved in this kind of move. So, where is it? This is one more competitor looking for a slice of the pie. It will be fascinating to see how banks react to this. There will be a shakeout. And basically it says payment interfaces like Venmo or Apple Pay could be disrupted. The senior director of banking intelligence at JD Power says he thinks AI checkout capabilities will disrupt checkout ecosystems. Big players will find a way to stay in the game. He said PayPal, Apple, and Google are pretty entrenched, so I don't think they're going anywhere. This will affect the upstarts the most, some of which will probably get gobbled up by larger competition. And so if we think about what PayPal is doing, PayPal, beginning of August 2025, enabling agentic payments with PayPal, pioneering the future of commerce. And effectively, they talk about moving towards the usage of AI. A cornerstone of agentic commerce is access, and PayPal is uniquely positioned to deliver it. With 434 active accounts worldwide, PayPal provides AI agents with instant access to vast data trust-rich environment. Agents can navigate and leverage this network to fulfill commerce needs efficiently, accelerating adoption for both buyers and sellers. So they're already using AI agents. 434 active accounts are using PayPal for payments. And what else do you think they're going to be using? Probably blockchain, crypto. As we know, PayPal is driving crypto payments into the mainstream, reducing costs and expanding global commerce. The difference between PayPal and JP Morgan is JP Morgan, their whole business is TradFi. PayPal is not a bank. It's a payment processor. I mean, sometimes they do act like a bank in some ways, but they're not like a JP Morgan type bank, right? PayPal is not giving mortgages to people. They're not giving credit cards to people, right? They're a payment processor and an e-commerce platform. And so they don't care. JP Morgan is going to fight to keep them in control. PayPal doesn't give a shit. They don't care whether they're in the banking ecosystem, whether they're in the crypto ecosystem. They don't care whether they're using crypto or blockchain rails or payment rails from the banks. They just want whatever's cheaper, whatever's going to make them more money. That is basically my viewpoint on it. And so, yeah, they're going to continue to push forward here. And so when you look at the PayPal stock, this is the 5-year stock price. I mean, we're down from 2021, 77%. And this is one of the largest payment processors in the world, right? And so what have they been doing over the last few years? They've been pivoting. While JP Morgan continues to say, oh no, well, we have Venmo. Venmo is better than Bitcoin and crypto, and customers can use it, but we think it's bullshit. They continue to say that, right? And continue to be kind of pushed away because people are not really using banks anymore. You know, the boomer generation did. But the younger generation, they're not, because the banks don't give you anything in return for depositing your money in the bank. So people are putting their money in assets. And what do you do when you have assets, right? You move them around. Are you going to use JP Morgan for that or PayPal? I would say most of the younger generation is probably not using JP Morgan for many things that they're doing in or going to be doing in the future, and especially a lot of businesses, right? Businesses getting their accounts shut it down. I just heard of another business that started, it's a legit, like they have like their products are being pushed into stores around the country, and JP Morgan shut down their bank account. What is going on, right? And so if we also look at PayPal, besides the price that the stock is so low, market cap is $66 billion. Now, if you look at the annual results, it says $31 billion last year in revenue and $4 billion in income profit, right? So basically, their market cap is double their earnings for last year, double their revenue, and basically about 10 to 15x what their net profit is or net income is. Some people would say that that's highly undervalued, right? But then you have to look a little bit deeper, and there's a lot of insider trades going on. I haven't really seen this kind of, the trading, yes, we've seen with other companies, but I haven't seen a company where most of their executives, their insiders, have such a few amount of shares. I mean, take for instance, this guy, Chris James, I believe he's the CEO. He has 132,000 shares in PayPal. PayPal is about $70 when I'm recording this video. It's $10 million on a $66 billion market cap company. And most of the other, executives have even less. So it's like, why do they have so few shares in PayPal? Is PayPal I don't get it. I've never seen that before, where all the executives have such a small amount of holdings in the company itself. So that's a little bit, for me, kind of like no. But like I said, their CEO is also an officer on Intuit, which is TurboTax, which is the tax platform. And I thought that was pretty interesting too. So they're kind of like in multiple companies, and probably the companies are going to work very closely in, I guess, developing better technologies. I don't know, a little odd. But either way, potentially PayPal is going to be a play on it, right? I mean, even if you just look at the PayPal market cap, $66 billion, compare that to JP Morgan, $817 billion, right? So JP Morgan's like over maybe 13, 14x the market cap of PayPal. And so PayPal, again, like I said, they want to make more money. And so they're going to look for the cheapest option. And the cheapest option is not using traditional finance. It's using decentralized finance. And so there's a big potential that they're all like, the shift is already happening. And they're using AI. And they've onboarded AI agents so that they can make and receive payments utilizing PayPal. Pay attention. Meanwhile, in the MicroStrategy world, a whole lot of other stuff is going on. Now, we've been talking about MicroStrategy extensively on this channel, but I think by the time this video is coming out, we're already going to know if MicroStrategy was included in the S&P 500. I personally think the answer is no, so therefore I'm predicting the future. They're not included. I could be wrong, and then you guys are going to comment down below, Cryptoviser, you're an idiot, you're wrong, they were included. But I don't think that they would be included in the S&P 500, and I think they know this. This is why they started selling shares on the open market in the end of August to raise more money to buy more Bitcoin, and they changed their guidance from just a few weeks earlier. Well, they bought even more. And Jim Chanos is saying MicroStrategy is continuing to reduce its leverage. 90% of the securities sold was from common equity at the market, selling their own shares at the market. They only sold $46 million of the preferreds. And the preferreds are some people don't like to call them debt products, but they're basically debt products, right? They're other products with preferred stock. So if the company was to liquidate, the preferred shares would get access to the Bitcoin before MicroStrategy shares, meaning this is more valuable than the actual MicroStrategy share itself. And so MicroStrategy, the share, is trading at a premium when I'm recording this video, right before that announcement. And so they're deleveraging, which basically means bringing that MNEV down to 1, meaning they're going to keep selling on the open market, meaning, in my view, people are going to stop buying because they know that they're selling. And with the Bitcoin price coming down as well, this is what we call NAV compression, net asset value compression, and it's going to occur. It is occurring. We can see that they just last week, the beginning, end of August, early September, they sold $425 million of their own shares, 1.2 million shares on the open market. Some people are going to say, well, it's not a big deal. I mean, yeah, but eventually it will be. And eventually the market will reprice. And look, they're already changing their new product called Stretch. They raised the annual dividend from 9% to 10%. And so they're having more and more difficulty, right? Bringing and keeping these products at par value. Par value is 100. So in the Strife facility, you're paying $111 and the par value is 100. So you're overpaying by $11, which is effectively the dividend. So if you buy at $111 and you get a dividend for the full year, and then it gets liquidated to 100, you're still in negative. A lot of people don't realize that. They're like, oh, I'm going to get 10%, but you're getting 10% on $100, not $111. And so that means you're overpaying. And basically you are paying, you're paying the dividend that they're going to end up paying you anyway. So it doesn't make sense. Now, Stretch, on the other hand, is under 100, so they want to bring that up to 100. So by increasing the dividend, they're able to bring this number over 100 because it incentivizes more people to buy it. That's the idea. Whether it's going to do it or not, that's a whole different story. As you can see, about a week after they made the announcement, the number is still here. We'll see when this video is launched. You guys are probably going to go look it up, and it'll probably be different. So we'll have to keep an eye on that as well. So that was the 100-point increase. We're also starting to see people getting worried. Fear is starting to enter the market. This guy said, this kills me. Misty, which is the yield max ETF for covered call options, their experiment is reminding me to be Bitcoin only. And he posted a chart of MSTY dropping significantly. Now, we've talked about yield max previously. This user said, am I the only one concerned that Misty is going to have to sell the equivalent of $3 billion worth of MicroStrategy stock by September 19th? If MicroStrategy does not get above $390, maybe the $3 billion will get eaten up quickly, but for a stock that takes an entire day to trade this amount in dollar value, it seems like a lot of money on one side of the trade. Also, October expiry is slightly worse. Now, effectively, yield max MicroStrategy works in the way that they are selling covered call options on the market. And so they're taking the premium from that and distributing it as dividends. But the issue is, and I've explained this before, in an uptrending market, you're going to do very well. But in a downtrending market, you're not going to do well. It's Difficult to explain because you're like, well, you're just getting the premium on the upside, but you're covered, right? It's a covered call. And so you're either holding the actual shares themselves, which are going down in value as well, or you're holding puts against your calls, right? Because a call believe you think the price is going to go up, and a put means the price is going to go down. And so if you buy a call, you buy an opposite put so that if the price does go down, it'll offset some of that risk of the upside, right? And if it goes up, you have the offside risk of the downside. It's basically another way to say covered call. Again, if you're not really familiar with dividends, it's going to sound very complicated, but if you do understand what calls and puts are, it should be pretty self-explanatory. But the thing that people don't realize about Misty and all these other yield max products is that the share price is reflective of the market cap or the assets under management. And so if the shares go down because the investments go down, yes, that it's going to be very hard to recover from that, especially in a downtrending market. And the dividends are also going down because they're making less money because they're having more downside risk. Like I said, in an uptrending market, you can sell calls on the market, you can buy calls on the market, like you're going to make money. But in a downtrending market, especially when you're buying the puts to cover the call, this can create a significant issue, especially if these end up executing, right? And you can see the dividend values have gone down over the course of time. Like I said, the beginning of the market, the beginning of this cycle, the MicroStrategy price was going higher. But now the MicroStrategy price is going lower or staying the same. And therefore, we already passed the uptrend of MicroStrategy, right? Let me show you on the chart. We already passed the uptrend. The uptrend was from 2023 till now. Now we're sideways chopping and basically going down. Like we may go a little bit higher, but we're basically sideways chopping for the last year. And so over the last years, just sideways chopping, you can see that the dividends went from $4 in 2024 at the peak of the market down to $3, down to $2, $2, 130, 130, back up a little bit, 230, but then back down 150, 120, 118, 108. And so the dividend is going down, meaning they're making less money. And you're having a downtrending market in covered calls. And so you can go to their website and you can see exactly what they're holding in the portfolio. Now, obviously, they do have a lot of cash, but they also have these covered calls and puts. And this is a risk. And so there's people who don't think that we're at the end of the cycle. But the end of the cycle is when there's over leverage, when people are so levered and they have to keep levering up, right? They lose their position, then they have to double down. Then they lose that position, they double down. And what are we seeing a lot of happening in hyperliquid specifically? We are seeing a lot of liquidations going on, a lot of big liquidations, and also a lot of people betting really big. I mean, we're seeing people going 100x long with $1 billion position, going 20x long or 100x long in a $20 million position, right? And then they're getting liquidated. And so these liquidations is a cleansing of the market, and then they double down. And so this is where you see the volatility because they're trying to beat the market, and then the market may move up a little bit, but the trend is your friend. And that's what we talk about on this channel all the time. If the trend is down and you get a little bit of a pump up and you're like, yep, we're good, double down now, you're going to get liquidated. That's the bull trap. I've been telling my viewers for the last couple of weeks since the Jackson Hole event with the Federal Reserve, and everybody said, oh, now the Fed's going to cut rates. And I'm like, guys, the trend is down. Anything else that we see to the upside is just volatility. And so if you're in one of these covered call strategies, they're going to lose significant value over the coming months, in my view. Again, and I was saying coming months, I mean over the next 12 months. Now you can see the Misty price has gone down substantially, and there's been a lot of volatility, and the dividends are going down. A trade is only a trade for as long as the trade is a trade. Again, everybody thinks that markets will only go up in Bitcoin, in stocks, in Tesla, in Amazon, in Nvidia, and all of these companies. People are, oh no, it's just going to keep going up. And it's like, okay, so if we take Nvidia, which I think like 44% of some of their revenue was come from two different companies, it's like, is that sustainable? What if one of those companies stop buying Nvidia products? Then they're 20% of their, or 50, what would that be? About 20% of their business is just cut out. That doesn't make any sense. But again, $4.3 trillion. One company valued at $4.3 trillion. The entire crypto market cap is 3.82 trillion. I want you guys to think about this. One company, Nvidia, has a higher market valuation than the entire crypto ecosystem, all the cryptos in existence, 20 million cryptos. 20 million, this number's right here on the screen. One company. And so either one, crypto is highly undervalued, which it is, and or Nvidia is highly overvalued, which it probably is. Or maybe both. One is overvalued, one is undervalued, one is undervalued, one is overvalued. But the bottom line is that there's so much leverage in the system, and we are literally not like talking about potentially being at, we are at all-time record highs in Bitcoin, in Ethereum, in gold, in Nvidia, in the S&P 500, in the Dow Jones Industrial Average. All of these stock indices, we are at all-time record highs. Let me pull up the regular S&P 500, not the futures. 5 years, all-time record highs. Dow Jones Industrial Average, all-time record highs. The NASDAQ, all-time record highs. Let's go to Bitcoin, all-time record highs. Go to Ethereum, all-time record highs. It may not be as high as you want it, but we are at all-time record highs. Maybe we're going to go much higher. Maybe we won't. But what is the risk reward, right? I mean, again, at the bottom of the market, people sell. That's when you should buy. When FTX collapsed, that was the bottom of the market, and people were freaking out. Should I sell? How much lower are we going? Is it over? Is it going to zero? And I was like, what? This is the bottom of the market. Now we're at the top of the market, and there's people saying, can't sell. You can't sell. We're going to go to 200,000. It's like, wait. So we're up 7x or 8x since $15,500, but we shouldn't sell for potentially maybe a doubling from here versus the potential of a 50% cut from here. This makes no sense. This is the euphoria in the market. Everything is at all-time record highs. And they're going to be at all-time record highs in 5 years from now as well. But in the short term, meaning the next year, 2 years, year and a half maybe, there is going to be volatility. And the trend is our friend. And right now, the trend in the last 6 months is that we're starting to top out. The same way we're looking for a floor at the bottom of the market to know that that is the bottom, this is the ceiling of the market. Over the last year, the ceiling. People think that we're going to go up and double or triple from here, and that will be the ceiling. No, that will be a pump and then a dump, and you will not catch it. And by the way, when that pump and then dump occurs, the dump is going to be rapid. You can see that here on the psychology of market charts. Once you hit euphoria, we drop, and then everybody's still so confident, like we're not at the top. There's no way we're at the top. We're just beginning, which a lot of influencers and YouTubers are saying. That's how the bull trap, right? Because the price will go back up, and they'll say, see, I told you so. We're not done. We haven't even hit new all-time record highs again. It's like what we did last week. But then once the trend topples over, straight down. And capitulation happens when people actually want to get out of the markets. And remember, guys, there are indicators of this, right? The biggest indicator is when you get calls from people and saying, hey, Cryptoviser, how do I buy crypto? How do I buy Shiba Inu coin? I want to buy World Liberty Finance. How do I get my hands on it? The person never talked to you about crypto or finance before. That is a top signal. And the bottom of the market signal is when people are saying, should I sell my crypto now? Is crypto over? Is it the scam that we thought it was? That's the bottom of the market, right? So yeah, I mean, it works every cycle, and we've gotten a lot of these signals from the market that people are euphoric in the market, that they don't think that there can be a downtrend. And once you start to see these people saying, wait, is this the worst Bitcoin experiment ever? And meanwhile, like Yield Max made a lot of people a lot of money through the dividends. I don't want to take that away. Like it is like a legit ETF with very high yields. But with high reward comes high risk. And the risk is losing all that you got in dividends just in the share value. And there is a potential that these companies or these ETFs will get liquidated as we move down. But keep in mind, not only do they have covered call ETFs, they also have short ETFs, and they do have a short ETF on MicroStrategy. It's called Winter, WNTR. Now, again, you'd have to do more research on the tokenomics of this, but effectively, Winter right now is at $32, but you can see a significant drop in the price here. But if you compare it to the MicroStrategy, the MSTY one that I just talked to you about, you can see that they are kind of inverse each other, right? When one goes down, one goes up, but they both lose value. They're both in the negative when they shouldn't technically be based on the understanding of how these work, but they're both in the negative. And so you're always going to get that NAV erosion as the dividends are being paid. So any jump in the price of this actual stock, because of the underlying strategy that they're executing, if they have to pay out from that, that is the market cap it's being paid out from the funds, from the assets under management. So that will bring the price back down. And so there is a lot of risk here. But again, if you look at Winter compared to what we just looked at MSTY, the dividends here are in the $2 and $3 range. Now, granted, it's a higher valued stock, so the percentages are a little bit different. But I would imagine as we enter the bear market, this will probably perform better than MSTY. How much will it perform better? I don't know. We're going to have to wait. Is it worth the risk of finding out? I don't know. That's up to you in your portfolio. But there's a lot going on. Even the strategic Ethereum reserves, right? We're seeing SharpLink. Now they have over 800,000 Ethereum Bitmine. They keep buying more and more. And they are selling shares in the open market. So we have to keep that in mind. But now we're starting to see the re-entry into validator or into staking on Ethereum. Remember a few weeks ago, we were showing you every single day, we were seeing about 900,000 Ethereum in the queue to exit. It's a 2-week wait period before you can exit staking. And we saw less entering. But now that we're seeing basically whatever is exiting is also then re-entering staking, 864,000 out of staking, 837,000 into staking. To me, this is actually bullish because this says that, yes, most of the ether that was exiting was being sold, and then it was being bought not by speculators. Speculators don't stake, they just trade. But the Ethereum treasury companies, they are staking. And so it's kind of a confirmation that selling has been going on, but it's also a confirmation that they're selling to Wall Street, which is what we theorized, but now we're seeing it in numbers. Let me know what you guys think about today's video and where we are in the markets. And don't forget to give this video a thumbs up, hit the subscribe button. I'll see you on the next video. Invest responsibly and crypto on.